Okay, welcome back to day 3 of the trading journal slash recaps, whatever you want to call it. We did take a good trade today. It was a 1 to 5 risk to reward. Yeah, we stuck to our strategy well, but honestly, wait, before we start talking about the trade we took today, let's just analyze the market before our trade. So first things first, we had an order block here. Market opened at 9, which is here on this down candle, and we swept liquidity here last night. Like really early hours this morning, we'll say 2 a.m., 3 a.m., out of my time frame. Could have had a trade, swept liquidity, low to the high, order block. Price came out of the order block, came back in, probably came out of equilibrium as well if we did draw that in. Boom, boom. Yeah, price came out of equilibrium too. Obviously, break a structure downside on this candle, enter for short, stops here, take profit 1, take profit 2, take profit 3, whatever. That would have been the trade. So this morning when market open, price re-entered this bearish order block. Obviously failed orders, a break structure to the downside. So we've had one confluence of re-entry to the order block, second confluence, break structure to the downside. We could have re-entered here, I guess, off a liquidity sweep or this, but that more looks like equal highs. Yeah, I guess liquidity sweep on the 15 minute, we could have called it even on the 3 minute there, and that's probably the. Let me look at this closer. Yeah, and we swept it. Yeah, so we would have swept liquidity there and there, maybe hourly if we got wicks on the hourly. We've only got one wick that we could have swept on the hourly, and did we sweep it? Yes, we did. We swept hourly as well. So there was a liquidity. So we've had 3 confluences there, which we could have entered, I guess. Re-entry to the order block, actually swept liquidity, and break a structure to the downside. I don't think there was any fair value gaps anywhere. No fair value gaps anywhere at all. Not on the 30 minute. No, even on the 15 minute maybe. No 15 minute fair value gaps. We had one here, but we kind of disrespected that. So okay, so we would have had 3 confluences, which would have been enough for me to want to enter a trade. We didn't though, because it's not really within our current strategy of it didn't align perfectly, but could have took that trade. So that's definitely something we could take notes on in the future. But anyway, moving to our trade now. So obviously with this move down, I marked out here we had a 30 minute BP. I'll show you that now just so we can get a reference for it. Obviously if I drop that there, we've got bullish fair value gap overlapping with a bearish fair value gap there to there, creates a BP. Price is always attracted to these. And then again we had a 15 minute bearish fair value gap here to here, okay, and well, we're on the 15 minute. I'm not going to show you. It's yesterday's bullish fair value gap. Our bullish fair value gap is, was it a BP or it was a fair value gap, is still here. And then we had yesterday's lows as liquidity. I think this is hourly liquidity, to be honest. Don't really need to check. I know that hourly liquidity, hourly bullish fair value gap. We did kind of disrespect the fair value gap, as we can see. So we can delete that as we completely broke below it. But we swept the liquidity. We here created the order block, the high to the low, price broke out of the order block into the bearish fair value gap. I think we did break out of equilibrium as well, if I can double check. Didn't break out of equilibrium, but whatever. We look at the confluences we had now. We had liquidity sweep out of the order block, so we retrace into the order block, liquidity sweep, retracement into the order block, break a structure to the upside, 3 confluences, we're good to go. Could technically counter fourth, but as yeah, well, we had hourly liquidity sweep, so sorry, we can't counter fourth because we completely disrespected that, so that may just be deleted. Yeah, and I did enter this a little late, I'll be honest. I didn't catch it as early as I should have. As we can see, I didn't enter till like almost the close of this candle, really, when I should have entered instantly off there. I wasn't looking and I caught it a little late, so I didn't enter to. So normally I enter, 1% of the account, $250. I only entered with $100 because with my stop loss at $100 because I entered late and risk management. I didn't want to like completely take the risk. So yeah, obviously looking at it, it could have been a wonderful trade. Obviously, we're going to go for these highs up here. So, yeah, because I didn't enter fully and I was a bit stressed about entering late. Not stressed, but a bit cautious. Yeah, I didn't completely do the best I could have with that, but still a really good trade. And it will also made me cautious because we technically reswept lows down here. So that also made me another cautious. So that's why I didn't enter to the full quantity of units I could have entered with. But anyways, let's look at the trade. So obviously we broke structure, price instantly went to the upside. We hit this 15-minute bearish fair value gap, had some struggles, but ultimately broke above it on this candle. And then I knew once we broke above that, we were a way to go to a take profit of a 1 to 5. Obviously I was targeting that just as a whole, because it's a Friday. I've done really well for the week already. I thought I'm not going to, well, I guess looking at it, I could have trailed my stop loss to like here instead of taking the take profit, and we still would have been up, to almost a 1 to 3. Oh, wow, okay. Yeah, lesson learned. Definitely about take profit 1, take profit 2 to maximize earnings. So two things I'm going to say for today are, wait, let's just analyze what the trade would have looked like if we entered properly. Would have had that probably there. Would have done stops just below here. Still would have had a 1 to 3. Would have been a little bit closer to a 1 to 3, that's for sure. Yeah. But didn't do that, did we? So we'll go back to where we were. That was us. So we had a 1 to 3, 1 to 1.125, sorry. Risk to reward. So yeah, there's not much I can say about that really else, apart from notes to take for next time. Make sure I'm entering early and paying close attention to enter off, to get prime execution. And also maybe if, I've done it on the other trade, so I don't know why I didn't do it today, just because I guess I thought, I've already done a good week. But every trade counts, Every trade counts, got to make the most of them. So definitely trail stop loss. I was trailing the stop loss. I think I trailed it here, and then I trailed it to, I think I did trade it to here, but then I had my take profit still up there. So this candle just broke through it and hit my take profit, and then I had a reaction off the BP, which we expected to, I guess, because it was also a bearish fair value gap, obviously. So, but it didn't have too much of an impact. We instantly broke structure to the upside off here and off this candle. Well, I'm pretty confident we're going to hit this liquidity up here, and then yeah, for people who took the move to the down, their stop losses would be, a price is definitely going to seek this area up here before going back down maybe. So yeah, that's today. Remind myself again, the notes are better executions, play closer attention, and also make sure I'm executing take profit ones, take profit twos, and trailing stop losses, because I would have only sold to maybe a little bit of the position here and then held the rest till up here and been trading stop losses to get maximize profits with also alleviating risk. So definitely notes to take of that. I'll remember those, and I think that's basically it for today's recap. Saturday, Sunday, so no trades. Be back at it Monday. So yeah, Monday. See you.